We'll talk today on whether we should buy stocks with the Sensex hitting a new record and the Nifty just a few hundred points away from hitting a new record. So as we speak, the Sensex is around 40,300 to 400 points. The record is near 40,500 points. So in short, as we speak, the Sensex is at a near record high. And we are getting reader requests asking us whether it's a good time to buy stocks now with the Sensex at a record high. The Nifty, as we said, is just 100 points away from hitting a new record of 12,000 odd points. The question that we ask is, the broader markets at the moment are looking increasingly, or rather, let me put it, still undervalued at the moment, while the heavyweights seem to be fairly priced at the moment. Remember, the rally that you're seeing of the Sensex hitting a peak of 40,400, 500 points is largely on account of a few stocks. These include heavyweight names like Reliance Industries, which is at a near record high. You have stocks like ICICI Bank at a near record high. These have propelled the index to where it is today. But in the broader markets, we still see a lot of value. For example, there are mid-cap stocks. There are some select small cap stocks. There are stocks that could give you a very good dividend yield. These are some stocks that you should be looking at. For example, in places where you could get a good dividend yield include some metal and mining stocks. Hindustan Zinc is one such stock where we expect the board of directors to declare a dividend sometime in the month of February, and we expect a very decent dividend of we can't predict, but we expect a yield of 8 to 10% from the stock of Hindustan Zinc. Coal India is another stock which tends to declare dividends in the month of February, and you can get easily dividend yields of 6.5–7% on the stock. You will receive the dividends in the next few months. So here, these are few stocks that you could look at for dividend yields. In terms of valuations, you will have to analyze each stock and select few stocks from the mid cap and the small caps section still look attractive. You could look at stocks like Graphite India. The stock has fallen almost by 1/4 and is very close to its 52-week low. This is a graphite manufacturing company, and we believe that the demand will perk up at some stage as the demand for steel keeps rising globally. The only thing is, it's the price stock of Graphite India has fallen largely because it depends on the company depends on needle coke, which is a key input in the manufacture of graphite electrodes, and the price of this raw material has gone up, which has hit the margins, and the stock has fallen by almost 1/4 from peak levels. But again, here we expect it to be give you a decent dividend yield in the next 1 year or so, and we expect the stock to recover as well. You will have to do some more research on stocks to get value and have some value picks. One stock that we like is the stock of Karnataka Bank. At 80 rupees, and considering the last year's dividend, the yield comes to almost 4% on the stock. Now, the stock is trading at a 1-year forward PE of just 6 to 7 times, and we believe that for a private sector bank, that's too low. We don't expect too much deterioration in the asset quality of the bank, and at 80 rupees, we see value in the stock of Karnataka Bank as well. So these are the few stocks that you can buy. With the markets at its peak, we suggest that you don't invest too much. Stay invested in cash, and should the market fall a little, you could probably buy. So it's probably a buy on dips market more than going all out and buying stocks.